Good afternoon, everyone. Gabe Velazquez with you, TransparentTradeSolutions.com on a Tuesday, 4th of February. Very quiet marks today after all the tariff. I guess the tariff wars lasted, 24 hours, 48 hours, except for China. That's still ongoing. But in any event, let's, very quiet markets today after yesterday's recovery. Let's go into the charts. Again, I have a class coming up apropos to what's happening today. Which is about gaps. So there's a link below. This is going to be next Tuesday. So again, go ahead and sign up. I'm limiting it to 20 students. Last time we get full pretty quick. So go ahead and sign up for that. Looking at the charts right now in the S&P, let's start there with the S&P. It's sitting at the gap that was created, which again is the topic for du jour next class. Notice the gap from the tariff, the Sunday. So we came up, filled it, came out of that gap, and we're literally just sitting there. Now it looks like it's probably, if we get positive news out of China with regards to tariffs, that probably goes higher. But you'll notice this is the gap here. The other gap, which was the prior weekend, which is the deep seek gap, if you will, came up and then also pulled back. So now we're basically on, if we can take this out, then I think we probably go after the all-time highs on the S&P. The NASDAQ, similarly, you can see that gap here. And this is actually... you can make the case that this was the move here. So anything that will, we have Google earnings this afternoon as well, AMD reporting, and then we have Amazon later in the week. So in summary, basically, we are still in this massive range in the NASDAQ, with the S&P obviously being a little bit stronger. But the way I've been explaining to people is, we have a trading range, very discernible, and we're sitting in no man's land, right in the middle, smack in the middle. And so are we going to break out to the upside and the NASDAQ make a new high? Are we going to break down, which we haven't been able to do so, below this 2075? That's the way these averages look like. The Dow is hovering right at all-time highs. Looks like that's going to make another new high. Remember, it's only 30 stocks, and then the Russell been just churning also between 2330 and let's call it 2180. So nothing there. Bitcoin obviously been very volatile as well. Similar situation here, 9,500 to 90 to 1070, 1080. All of this is in line, and there's a very strong corollary between the stock averages, particularly the Nasdaq and the S&P and Bitcoin. Even you can see the correlations here. One of the things that could be a leading indicator, if Bitcoin can't get going here, then you got a shot maybe at another here, and then if this could be the canary in the coal mine where Bitcoin actually breaks down and then the rest of the markets follow. So we'll see how that goes. Rates, nothing new here, back and forth, hovering between 460, 450. Friday's jobs number could be the deal breaker here. Maybe that breaks, and the dollar all over the map as well. Maybe peaking. The fact that we failed to take out that high up here could be setting up for, now obviously the next piece is we're going to break down below 107. But this is the first signal that maybe the dollar could be in the midst of putting in a top. This failure to take out that high on this go around. But it's, again, way too early to make any judgment on that. And then, oil did get a little bit of a bounce, but very, very choppy, and all the rest of the markets are just in a consolidation phase. Been talking about soybeans. Maybe again, maybe this is ready for a breakout. corn has been edging higher a little bit. Maybe after this consolidation, maybe the grain markets with all the tariff talk and everything else, maybe they're ready for a move. And then China, which is interesting, China had a nice, after resuming trading from the new year, looks like this is ready to break out. I don't talk often about China, but we are in our group here, we are looking at a possible breakout in the Chinese stocks. This is the Hang Seng. You can look at MCHI. There's various ETFs that can track China, but I think China is clearly going to be something to look at going forward. But you still have to wait for that breakout or a pullback. What basically happened with China, this is the Hang Seng, is it came down to that gap, close to this gap where we actually had that first stimulus talk back in the fall of last year, remember? And then pretty much round trip that all the way down in here. So this is going to be in the crosshairs, I think, as well. So all in all, again, lots of choppy trading today, very quiet with all the tariff talk settling down a little bit. Now we got to focus on earnings and the non-farm payrolls on Friday. Again, I have a class coming up. Go ahead and sign up. It's going to be linked on the bottom. It's going to be a week from today, talking about gaps. And we're seeing a lot of gaps, especially on futures over the weekend because of all the news coming out. And then obviously with earnings, there's all these gaps that are created also. So if you want to learn about that, go ahead and hit the link below. Subscribe to the newsletter. If not, I'll see you next Friday. Have a great week.